All right, ladies and gentlemen, we're walking into Monday's trading. Tomorrow we are in no man's land. We're going to discuss our game plan in Forex. A little bit of a spoiler alert for the Newsbeat Masterclass coming up. We're going to discuss the fallacies of Wall Street, what you need to know, our full stock analysis. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. We're going to first start talking about the markets, and then I have a little treat for you guys. We're ready to set our record-breaking class attendance here at T3 with our master class coming up. And the funny thing is, we didn't even start marketing for it yet. So what I'm going to do for you guys, since we have hundreds of people already signing up, all those people who did sign up, again, are guaranteed entrance into the live portion of the class. And I decided, heck, why not? You guys are the ones signing up. Why don't I spoil you guys with just a minor part of the course? We're going to talk about so many things in the course. Like if you guys enjoyed the Health Beat show, this is the Health Beat show on steroids. If you guys enjoy, the Trendline course, this is the Trendline course and everything else. If you guys enjoyed, of course, the Trendline course is actually a little more focused on trendlines, obviously, but you're going to get every single thing I do. All sorts of great things, psychology, methodologies, strategies. It's just going to be basically an open book of the best things that I have culminated over the years. But first, ladies and gentlemen, let's go into Monday. So, as you see here, quiet weekend. Minor gap up is going to likely be coming in the market tomorrow. What now? What now? We're going to be sort of in no man's land, and let me explain it. Because odds are we're going to be gapping up tomorrow. And just looking at these triple Qs here. The true resistance, I'll tell you the triple Qs tomorrow will come in at 158.89. I don't think we're gapping up that much. We're pretty much going to be in the middle of Friday's range when we open up. We're most likely going to be just somewhere smack in the middle of Friday's range, being unable to really tell if we're going to shoot up or down. I think I'm just going to look for some good analyst upgrades if possible, look for some good news flow and make money. That's pretty much what I'm going to do. Wasn't too crazy about Friday's trading. It was like, not because we were down or up. It has nothing to do with that. It's just a lot of the trading these days are just feeble. And that's because of really on the analyst side. The analysts are afraid to come out of the woodworks, but I have good news for you. The analysts are going to be forced to come out of the woodwork soon because if this market goes up, they're going to have to come out and defend the ridiculous price targets they put on things. What do I mean by ridiculous price target? How about $2,000 on Amazon? Oh, that's not ridiculous, Mark. It'll get there eventually. Yeah, okay. You say so. How about these $220 targets on Apple? They might have to rethink that. And how about the $230 targets on Facebook? They might have to rethink that as well. So what's going to happen is I'm going to tell you how the psychology of the analysts are going to change because coming into this week, there's still going to be a lot will be hiding under their desk still, but if the market goes down, they're going to either have to finally throw in their chips. It's like a poker game. And they're just throwing in more and more chips into the middle, but eventually there's going to have to be a showdown. And they're either going to lose their hand, they're going to lose the pot, or they're going to throw in more money and defend it. And it's pretty much like a poker game. So coming in this week, a lot of these analysts basically the analysts who rated all the FANG names, Facebook, Apple, I'll put Apple and Amazon, Facebook, Apple, Amazon, Netflix, and Google. Like analysts that come out, who are definitely bullish on those names. How many people have negative targets on any of those names, right? Almost no one. It's crazy. That's the point I'm making because all these names are obviously going down with the market. So we're dealing with we should gap up tomorrow. That's my thought. I could be wrong. Who knows what happens overnight in the markets, right? we should gap up a little tomorrow, and we should be pretty much stuck in a decision where do we break Friday's highs or lows? Now, granted, we might not do either tomorrow, which is going to set up for a really good trade on Tuesday. Or we probably, if anything, would break down, would be the more likely scenario if we were to break any levels. So, most likely scenario is actually we stay inside. If we are to break one way, it will likely be down. That is my personal take on the entire market. Again, I'm not walking in going long the cues. I'm not walking in going to short the cues. I'm going to come in, look for good news flow, good trade, good probability, because we're dealing with a market where a lot of things are going to come back again. And that's what's exciting. The market was boring when we were grinding up every day. Let me remind you of how you felt. Now, how many traders felt this way? I'm not saying you weren't trading, making money, whatever you were doing. How many of you traders felt this way when the market's grinding up? It's too high, it has to come in. It's too high, it has to come in. It ran too much, it rallied too hard. I just need a little bit of a break in the market before I go long again. How many of you traders talk like that? Right? So here it is. And my prediction is we are going to hit the 200 moving average on the triple Qs. A matter of when, not if. It's literally lurking. You see this little purple line here. It's at 153. So for me, just remain cool, remain calm, remain confident. And I don't think tomorrow is a gas pedal slam day. However, we have been seeing some news flow chatter come back. On Thursday, I didn't mention on Friday, but we actually were watching SYF. Now, I didn't make money on this particular one, but I am highlighting this trade that we were able to get a really nice early read on it right over here as it shot up. Like we were able to, be part of this move. And the good news about a move like this is that there's probably more to come in the future. I mean, these chatter names aren't really sporadically spaced. They tend to come in chunks. You tend to get a bunch of great news flow ideas back to back to back to back to back. And then it slows down, and then it comes back, and then it slows down. Yada, 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 right? It just keeps coming and going. I am telling you, you should be excited because it is going to come back in a big way. Our game plan in Forex, very, very simple. Just picked a couple $3 names here. BWEN, which is Broadwind Energy, was a name that actually popped up higher on Friday, and then it ended up pulling lower. But let's take a look here at BWEN. Really close strong, just under the 200 moving average. I'm looking for a follow through from $3.25. Just a really big breakout name. And the next one, of course, is MBII, which is Marone Bio Innovations. Another stock that's been running beautifully recently. I don't know how many of you guys kept this little one on your radar. But beautiful pop up with the weak market. Looking for a follow through from 339. And next, we're going to talk about our fallacies from Wall Street. And this is going to be very interesting. It's actually coming directly from the course. Whoops. Nope, not that. Right here. It's actually coming right from the course, so it's a little bit of a spoiler alert. And just give me just 1 minute. I will be right back, and I'm going to spoil you guys on the fallacies of Wall Street. Just give me 1 minute. Okay, ladies and gentlemen, thank you for waiting. So, again, thank you so much for making this Newsbeat Masterclass the hottest thing happening here right now. And, we have just so many signups, and I'm so happy that so many of you guys are looking forward to this course as I am looking forward to giving it to you guys and really just releasing everything I know upon this market to really give you guys the best edge possible. I can guarantee you that every single person who takes this course is probably going to learn dozens of things, but everybody's going to learn one thing for sure, one or two things, and that's worth 10 times the money that you'll pay easily. So I'm looking forward to throwing the course, and of course, a horse is a horse. Of course, I'm going to share with you the fallacies, ladies and gentlemen of Wall Street. And this is a small spoiler. There's like hundreds of there's hundreds of things here, like literally. This is one of them. So it's part of the psychology section, which has so many different things as well. And it basically is telling you beware of the lies that Wall Street has shed upon us. So, similar to one of the other Newsbeat episodes, one of the first things we discussed was basically how Wall Street basically tells you that you should focus on improving your weaknesses as opposed to your strengths. And basically, I'm trying to teach you guys through this how to actually fix these things. So, a lot of people on Wall Street say, you're strong at some things, you're weak at others, fix up what you're weak at. The opposite could not be true. The opposite of that cannot be true. You need to focus on improving your strengths first, not your weaknesses. I would rather be good at a few things than average at everything, or a jack of all trades, as they say. And then through the course, we're going to say, how do you tell what you're good at? And it's going to go to really recording certain chart patterns that you trade well, certain stocks in certain sectors that you play well. It could just be an individual stock that you trade well. Maybe what you need to do is focus on 3 stocks, 4 stocks, 1 stock every day. And we're going to talk about ways that you can actually do that and improve on actually mastering your strengths. Because if you're a master out of 1, 2, 3, 4, 5 things in the market, you're going to be a successful trader. If you're slightly above average at everything, good luck. So that's one of the fallacies of Wall Street, or falsehoods of Wall Street, if you will. Another fallacy in Wall Street, number 2, you probably heard me talk about, is that you must have predefined stops on every trade. The majority of Wall Street millionaires and billionaires do not abide by this rule for the majority of their trades. I repeat, the majority of Wall Street millionaires and billionaires do not abide by having a predefined stop on every trade for the majority of their trades. Now, why it's a fallacy? Well, Mark, what if I blow up my account? Let's talk about that. Let's play that devil's advocate, if you will. Most traders cannot choose a good level to exit a position. I'm sorry. All these traders out there feel like they could just throw in a random stop loss, or I'll risk 50 cents, or I'll risk here, and they feel it's a good stop. It isn't. The funny thing is about traders, if you don't have the ability to call a good entry, you don't have the ability to call a good stop consistently. Sometimes you will. I'm not saying, keep throwing a dart at the wall, you're going to hit a bullseye. I can guarantee you. But this isn't a game of darts. This is a game of money. And when you're wrong, you lose. When you're right, you win. It is of crucial importance to understand this. It's really easily compatible with options because how much you are risking is defined ahead of time. But through our seminar, through our course, through our master class, we're actually going to show you how to do real risk management. Risk management to help you beat yourself. How many people are like, oh, you just put a stop loss at any trade, you put in a hard stop, if it hits, you're out, you're done. If it keeps going, great. We know that doesn't work. That doesn't work for the majority of traders. If it works for you, I'll show you 50 other traders in which it doesn't work for. All right, I've met tens of thousands of traders in my life. I'm sick and tired of hearing that. Predefined stops is how you suffer. You ready for this? Does this sound familiar? Death from 1,000 paper cuts. Death from 1,000 paper cuts. That's what kind of pain you will suffer. You will suffer the death of 1,000 paper cuts because you'll keep getting stopped out and you have no idea why. Oh, I'm very tight with my risk. I'm very disciplined. While you tell yourself that, people will tell you that as you lose money, that you're very disciplined. Wow, thanks. I feel great. We're going to combat that. We're going to show you how to fix that. Another fallacy of Wall Street, which is basically the lies. Let's call them lies of Wall Street. I call them fallacies because, I like to be cool about it. Let's talk about the lies of Wall Street. It's okay to be right less than 50% of the time if you make much more money on winners than losers. It's okay that you're right less than half the time because you make 3 times as much when you're right and you only lose 1 times as much when you're wrong. Right? That is garbage and that is a strategy that no longer works. When I say no longer works, don't tell me about that one trader who took a huge position in one name and lost on 10 other names and he was right 9% of the time but his account was up. We don't need to hear unicorn stories here, okay? We're talking for 99% of traders out there. That's who I'm referring to. It doesn't make sense because it doesn't take into account a trader's psychological health. If you make and you lose and you make and you lose, you're going to be psychologically destroyed. And guess what? Even though we're not discussing it today, maybe I'll discuss it tomorrow as another spoiler. We're going to teach you how to fix your psychology scientifically. We are going to I'm going to give you exercise. Do this, do this, do this, and you'll fix your psychology. Answers, real answers, not garbage. Not, you have to remain disciplined. You have to leave your feelings at the front door. Oh, really? Okay. I'm no longer human. Let me rip the humanity out for me and leave it at the front door. Now I'm ready to trade, guys. I am ready to trade. I have no feelings. Like, do people really think this garbage works? They say that not because they're ill-intended. It's just that they're idiotic and they don't know how to really teach someone. I hate to say it. It's idiotic. I'm not calling them idiots. Let's use a better word. Ignorance. It's not knowing how to solve an issue, telling someone to do something that basically telling a human to do something that removes their humanity. That's what it is. And I can't stand it. And this passion and this fervor that you hear within my voice is why this course exists, because I just can't take it anymore. I can't take all the garbage that's being loaded in people's ears and being told something and nobody knows why 95% of these traders are failing. How did that happen? I'm not saying 100% of traders succeed, but for God's sake, give me a better number than 5%. And you'll realize in our room, we have much higher numbers than that. Much, 10, 15 times that number. The majority of traders in our room succeed. The majority. That's a bold statement, I know. I could tell because I see our retention rate. We have the highest retention rate. By far, no one's retention rate comes close because traders make money here because traders in this room understand the next thing I'm going to talk about. The next thing I'm going to talk about is you have to be able to call tops and bottoms in the market if you're going to make money. If you want to be consistent, not make money. If you want to be consistent, you can make money. Luckily, I know a dude who bought literally $100,000 worth of Netflix calls with a $200,000 account. He bought deep out of the money calls and he held them in Netflix rally and the dude made $2 million. He's a guy at T3 actually, a trader, one of the traders there. And that's all he did. And he made one trade in 2 years. That's all he does. He didn't do anything else. He just bought Netflix and sat back. And it worked beautifully. Sick trade, huh? But that's the people don't necessarily do that. You have to be able to call tops and bottoms in the market. Maintaining consistency could only be done in this market with the ability to call tops and bottoms at times. I'm not saying 100% of your trades work. Of course they don't. Just like 100% of your trades don't fail. Of course they don't. But everybody talks about consistency in this market. Consistency, consistency, consistency. And I'm probably up there as one of the, if not, one of the more consistent traders on the planet. I know this because when I bring my track record to these large firms, they throw money in my face right away and they tell me I'm the most consistent trader in their firm. They tell me that. They tell me this win rate is higher than anyone in their firms. They tell me that. So what is the trick? The trick is you need the ability to call tops and bottoms in the market. That's it. People ask me, oh, wow, how do you do it? You have to be able to call a top or bottom in the market. So the fallacy is you can be consistent even if you're generally not buying near the bottom of a move or selling near the top of a move if you're shorting. It's preached because most traders and educators have not discovered how to do it consistently. And if you listen to these Newsbeat shows, you know how important it is to be able to call the top or bottom in something. Why it's important is when you buy near the bottom of something, you know how much psychological health, how much psychological fortitude. Think about your psychology as if it were a castle. And think about the market with trebuchets and catapults and battering rams ramming on the sides of your walls and front door and shooting boulders at you and knocking you down. When you buy near the bottom, none of that happens. It's like peaceful day. Birds are chirping. You could hear the wind rustling through the trees. There are farmers smiling as they're carrying their the works of their labors back into the castle. That's what it's like. It's serene, it's calm, and it doesn't affect you psychologically speaking. See, what people don't realize is if you bought a stock, for example, at $50, and you want the stock to go to 52. However, when you bought the stock at $50, it went to 48, and then it went to 52. You bought it at 50, you wanted it to go to 52, it went to 48, then 52. Let's say you bought it at 50, and you held it all the way down to 48, you were down 2 points. What are you thinking when it goes back to 49 right now? Oh my God, should I just take $1 loss here? I was down twice as much. Is this a gift? What do you think when the stock goes back to 50? Are you really having it in you to sit there and hold it? I'm not even saying you took a big position. Whatever. Oh my goodness, I'm back to break even. Oh my God. 90% of you are selling that position there by that point. If you didn't sell at 49. 90% of you sold out. Now, if you get to $50.50, now you're up money on a position, even 50 cents on a position you were down $2. Even more of you are selling. You hit $51, even more of you are selling. You hit $52, less than 1% of you who bought at 50 are selling out there. Why don't they talk about that? Why isn't that an important discussion? Why isn't that an important discussion? Because it's too difficult for traders to actually try to figure out new information, to figure out how to buy in the top or bottom of anything. I don't care if it's on a short-term time frame, you're calling the bottom of a 1 minute, a 5 minute, a 15 minute, an hourly, a daily candle, I don't care. You have to be able to call the bottom of something. Doesn't mean day lows. Let's say a stock goes from 50 to $52, drops to $51, and then goes to $55. I'm saying when it dropped to $51, you need to be able to at least buy there, even if you didn't buy at 50 per se. You have to call the bottom of moves. In our room, what I will offer you pretty damn consistently, and you've already seen it, I will call a lot of tops and bottoms pretty accurately. I should do it 7 out of 10 times or better. On average, you take an entire sample size, I'll be 70% plus. Calling tops or bottoms of intraday moves. That is critically important. And guess what? I'm going to teach you that. I'm going to teach you how to do that. Nobody on Wall Street can teach you that. You know why? Because nobody puts in the time to figure it out. Everybody wants to believe that everything is random. Oh, the market, it just randomly pulls here, it randomly pops here. It is not random. If humans programmed all these robots to trade, these black boxes, these algorithms, where depending on who you ask, it's doing 80%, 75%, 90%, 95% of the volume, nobody really knows, but that's the range, that's the correct range. People aren't making these numbers up. So you're telling me these humans design these robots and we can't figure them out? We can't be faster than them. But we can be smarter than them and we can jump ahead of them. What am I doing when I'm calling out intraday trades? What am I actually doing? What is the science of what I am doing? I am teaching you how to front run an algorithm before they buy or sell. That is what I'm doing. I am front running an algorithm. That is all I am doing. Can I predict 100% of the algorithmic moves out there? No way. What am I really doing? Trying to figure out, 4 or 5 names in 3,000? I'm doing less than 1% of the algorithmic moves. However, when I open my mouth, I'm looking for a top or bottom or something. When I open my mouth that I'm buying here, if this happens, I'm predicting that ahead of time. I know the algorithms. I understand how a lot of the strategies work, and I take advantage of them. And that's how I make money, and that's how people in the Newsbeat live room really remain so consistent. I am going to teach you that, ladies and gentlemen. That is my life's work. That is my life's work. Now, why would I teach you that? Well, you're going to become a better trader after this. You will. And what you're going to do is you're going to want to be in a community of like-minded, consistent traders, and you're going to join the Newsbeat live room. Because you're going to make more money, you're going to see the value of being surrounded by people who think like you, and your consistency is going to increase. And that's what's going to happen with you. When you really get in and you really stop doing these random trades. And, there's a lot of traders who just like doing their own thing. They see something, they want to hit the keyboard. I'm going to teach you how to read your own stocks. I'm going to teach you how to add consistency. I'm going to teach you something that I have made hundreds and hundreds and hundreds of thousands of dollars on by helping tier 1 firms develop strategies. I'm going to teach you these things. And I'm going to do it for a very low price. And not only that, 100% of the money I make off you is going to a charity. How's that? We're going to take that a step further. We're not only going to make you a better trader, we're going to make the world a better place, and we're going to make the Newsbeat live room a better place. We're going to make everything good. It's a win-win-win-win situation for everyone. That's what we're going to do here. And no, this stuff isn't taught everywhere. In fact, it's taught nowhere. The stuff I teach you, you will not find in one book. Maybe, for example, in the course I show what a bull flag is. Yeah, you'll find 1,000 places that show you that. But the stuff I'm teaching you? All the stuff? Oh no, this is all stuff I've created and wrote. It was supposed to be released as my 3rd book. I never did it. This is really the first release of my 3rd book. This is what it is. And it's done in a course-like style, so I could update it to what's working today. See, the problem with books and trading books is you take them, you read them, and by the time they're published and they're out for 3, 4, 5, 6, 7, 8 years, 85%, 90% of the information is useless. Actually detrimental if you follow it. And everybody knows that. Because if there was that one book out there that made 20% of traders successful, every trader in the world would read that book. And you know that. Another fallacy of Wall Street. Technical indicators don't work because they're never 100% correct. Well, I'll tell you one thing. Goldman Sachs and other tier 1 firms would strongly disagree with you. They would strongly disagree with you. They're traders making money consistently using every form of technical analysis indicator known to humanity. You have to see how some of these black boxes are worked. They have everything. Things I've never heard of. Ichimaru clouds and all these. I'm like, what? They have everything, and that is how they trade. It would be the same thing as saying everything you do is failing because you don't win on all your trades, by saying technical indicators don't work because they're never 100% correct. Through this course, we're going to have this chapter of the course called Trading Confluence, and it's going to teach you how to combine different technical indicators into one strategy. The first of its kind. Nothing else out there is like that. We're not saying, so many people have, multiple time frame confirmations and they talk about things like that. We're not talking about multiple time frame confirmations. We're talking about using different technical indicators on the exact same time frame together to form a higher conviction trade. We're going to teach you that. Never shown before. And not only that, let's talk about more fallacies, right? The longer and harder you work, the better of a trader you'll become. Most traders are not good at certain times of the day. The majority of intraday traders can't trade at every single moment. Walking away is not an act of laziness, it's an act of intelligence and capital preservation. And take advantage of a paper trading account if you have nowhere to go after your hours of trade become difficult. Another fallacy of Wall Street: having CNBC on or any other stock market network while you intraday trade is useful. No. It's the illusion that people think they look serious because everybody has seen these Wall Street firms and all these big firms, and there are these big, huge, elegant televisions, these tremendously sized flat screens, and something important must be on this $10,000 television. What is it? It's CNBC. Wow, this is how I know this place is serious. It's an illusion. It's an illusion of garbage. And listening to CNBC might make you think you're getting it. I'm not saying watching CNBC is bad. Please don't misconstrue my words. I'm saying trading actively in the morning, for example, before trading slows down at whatever point of the day, watching CNBC is extremely detrimental. It's background noise. Your brain has to process what CNBC is saying while you're trying to trade. It's garbage. The only noise that should be going through your ears is somebody either giving you technical support. I mean, like technical analysis support, not like fixing your computer, like giving you chart thoughts, or somebody actually saying a live trade they're about to enter. That's important. Analysis of the market in live in real time. That's important. Listening to CNBC is like Captain Hindsight, literally. Everything you see on CNBC was passing our news filter between 10 minutes and 2 hours ago. Anything important you see on CNBC, traders have already taken advantage of that and already sold off on it in a way where it's just way too late. Don't listen to it's not CNBC personally. It's Bloomberg, it's whatever you want. You're sitting there, you're a swing trader, you're bored, you're sitting back, you're not really trading, you're watching positions. You want to watch CNBC or have it in the background? Fine. You're an active trader, you need to focus on the market, turn off CNBC. Turn off any of these stations. Another fallacy, of course, on Wall Street is if you need to have a huge bankroll to make good money. No, that is not true. That's not true because of options. Options make that not true. I turned $50,000 into over $3 million in 2 years with an option account. You're telling me that you need a huge bankroll to make money? The funny thing about that $50,000 account, I could have done it if I started with $15,000. I never went all in on all my trades. I never went all in on any trade. If I started with, ironically, considering my largest trade before I started gaining money was like $5,000. If I did go all in on certain trades, I could have done it with a $5,000 account. With options, you make a multiple of your money. It's almost impossible when you have a $100,000 account to make. if you have a $100,000 account and you make $35,000 off it, that's phenomenally impressive. That's phenomenally impressive. I'm talking about like per year. That's pretty impressive. The reason why Wall Street likes you to trade stock instead of options, and firms like you to trade stock instead of options, is because of the amount of money they generate through you stock trading as opposed to option trading. So the lie on Wall Street is options carry such high risk compared to stock, when the exact opposite in every single way is true. If you're smart, if you know how to manage risk, which we have an entire risk management section which will teach you exactly how to do that, you will never take that sort of risk ever. And last one but not least, high frequency trading makes day trading obsolete. That's another fallacy of Wall Street. You'll never be faster than a high frequency trading black box or robot. However, with what we do here at Newsbeat, you can have them submit to your will. What do you think happens when we're buying one of these stocks at the lows? The robots have to pay more than us. These big Goldman Sachs firms and Merrill Lynch's and these tier one firms out there, these JP Morgans, they can't stand us at the Newsbeat room because we're literally making them pay more for every single one of their trades. We literally make them pay more for the same stock because we are ahead of them. We click on ahead of them. We know when they're going to react. We know when they're going to buy the majority of the time. And we're literally front running them. We're literally front running them, meaning we're running in front of them and buying the stock before they do. You might not be able to jump in a stock quicker than a black box can automatically, but you could buy it 10 seconds earlier than the black box, 5 seconds earlier than the black box, before the black box even wants to buy. When we buy these bottoms, like when we call the bottom in the Qs, we call the bottom in Facebook, why do you think it pops up like magically from, when we called some phenomenal bottoms in Facebook recently, or the market as a whole? Why do you think it bottoms there? Because that's where the algorithms are buying more than they're selling. That's where the robots are buying more than they're selling. You're going to learn all of that and a lot more. If you are interested in the biggest class out there, it's really sweeping over. It's going to be, it probably already is, but it's going to be, because after the marketing, the biggest thing here. I highly recommend you take this class. It will change your life as a trader. And it is the most inclusive, in-depth trading thing and course and program, whatever you want, a class that I've ever seen in my entire life. It goes over subjects never, ever talked about. Dozens of them. Dozens and dozens and dozens of them that you'll never find in any course. It's unique to us, and it's important to succeed as a trader. And we're going to go over all of them. Of course, now, ladies and gentlemen, we have our full stock analysis. If you are interested in a live spot, to the master class, you'll find it within the description. It's like 50% off, or a little more. It's like $9.95 to $4.95, so it's like $500 off. It's like 50% off. Take advantage of it. It is a life-changing course. I spoke to a trader earlier, and he's like, Mark, I had a $100,000 account, and now I'm down to $60,000. I can't afford to take this $500 course. He told me. One person, just one person. Everyone else was so excited. I'm showing you like somebody who didn't want to take it, and I literally responded to him. You lost $40,000, and here's going to be the most eye-enlightening, eye-opening course in existence. And you don't want to spend $495 on it because that's too much money. But continuing to scrape by every day, trying to make money, that's what you're going to do. So what complete insanity. Don't be insane. This is a life-changing course. This is going to change you as a trader forever. Don't do something crazy. We have some huge hedge fund managers taking the course. It's not about traders not making money. It's about successful hedge fund managers signing up for this course as well. We have very big people, very big traders who are going to be part of this, and you should too. If you are interested, you'll find it in the description. Ladies and gentlemen, I am going to go into my full stock analysis now. That is for Newsbeat Live members only. We are the fastest growing trading room in the nation and the highest retention trading group in the nation. Happy trading, make money, and we will see you guys tomorrow on the Newsbeat Live trading broadcast. Have a wonderful evening.